Morning.
We got this data come in about with regard to the finances, but finances is the key here, is it not? And, you know, when we talk here, we can also probably draw a link to margin financing as well, which has really had there's a lot to blame for what happened recently.
Oh, it was the integral part of what's happened, although the authorities were trying to blame short selling and foreigners, which is always the playbook that's followed everywhere around the world whenever there's a market crash. You know, short sellers are banned, foreigners are blamed, but the key issue here was just the amount of leverage that had built up in the system, and quite a lot of that, in fact the majority of it, was probably unregulated. It was done in shadowy finance houses.
Well, that's just the thing. Absolutely. I mean, you know, bring back shadow banking almost in a funny sort of way.
It has. It was sort of a type of shadow banking, you know, for the retail investor who wanted to, in effect, get into the stock market, let's face it, with the government's encouragement. And the government knew this was going on at the time. They were, you know, the loudest cheerleaders for the market. The regulators knew where a lot of that money was coming from, but when the market was going up, there was nothing...
Nobody minded, did they, really?
And it wasn't called malicious buying like it's called malicious selling now.
But that's just it, isn't it? I mean, when it was going up, it's all fine, but when it all started to go wrong, they were lashing out at everything and bringing in new laws. It was quite something to behold. How much damage has it done, though?
An enormous amount. The credibility and the reputation of the Chinese markets has been built up over many years. It's taken a long time for people to believe that this was a well-run, well-regulated financial system. We've now got foreigners participating in it. That, in effect, has been almost destroyed in about 2 weeks.
Well, I tell you what, though, if you look at the amount of money fleeing Hong Kong, going up there on the northbound of that stock connect, you wouldn't have thought so.
And it's not going to come back, though. The Chinese retail investor, when this is over, is not going to rush back into the market. If you are a foreign institution, you must be looking aghast at what's going on here. Stocks, half the market is frozen, and you can no longer sell.
Well, that's also getting better, let's face it, Peter. I mean, we get more and more companies which are resuming trading here. And as I say, there's more and more... There's a lot of money leaving Hong Kong today, and that quota is filled up going to Shanghai.
Yeah, but I think, you know, the damage is done to the reputation of the marketplace. What's going to happen next time the market goes down? Is the market now just a tool of the Chinese government, where the government can step in and, in effect, set the price of stocks, decide this is the level that stocks are going to trade at, this is their PE, because this is, in effect, what they're doing at the moment. Now, of course, they will say it's temporary, but it should never have happened at all. It shouldn't be temporary. The market, you know, has to be allowed to find its own level. And if people are really concerned about the level of the market, what they should focus on is the bubbles on the way up, not trying to step in when some of those bubbles pop on the way down.
What are you telling your clients, then? Well,
I'm telling them that right now, this is not over. They still have to be very cautious about the market. You know, this is the same bailout, playbook that we follow everywhere else in the world, except here we've seen some most extraordinary things. I mean, we've seen central banks intervene in the markets, normally in the bond and the currency markets. We occasionally see them intervening directly in the stock market. We've seen it here before in Hong Kong. We've seen it in Japan. But we've never seen anything like this. You know, the way in which...
It's calmed down for a bit now, though. That's the thing.
It's calmed down, only because the market is going up. But of course, what happens when the market turns back down, as inevitably it will, are we going to see the same restrictions again? Are we going to see people banned from selling? Are we going to see people prosecuted for short selling in the futures market?